Wednesday, January 5th, 2022, Monaco 64, home of alternative economics and contrarian views. We're going to look at the energy market today. We've been following that relatively closely since September. Yes, problems were starting to pop up in September, maybe even August. We've seen dozens of energy suppliers in the UK go under. The price of natural gas and other energy products have been rising massively since 2020 and especially in 2021. And now we're starting to see a lot of volatility, and that's creating a lot of problems. And today we're going to touch upon a major German energy giant called Uniper, which I'd never heard of. They had to borrow $11 billion for margin calls. And we're also seeing that in some countries, and in particular Kazakhstan, which is a former Soviet republic in the middle of Asia. It's a big country. The population there's 20 million. Their GDP per capita is in roughly the top 50 in the world. So it's a fairly significant country. They've had massive protests in Kazakhstan because of energy prices going up, and the government has had to resign in Kazakhstan. Maybe that's a bit of a foretaste for the UK government come April this year. And why April? Well, because a lot of the energy companies, or all the energy companies here, they've had their prices capped, and the cap comes off in April and they can adjust the prices higher. Yes, that will be very interesting when people get their bills and they see that it's gone up massively. I saw my utility bill go through yesterday. It's still the same, but I'm expecting it to get to be a lot higher. And yes, so it's not just the price rising that is a problem, because this German Uniper company says that they have a lot of energy assets, and that a higher price doesn't necessarily mean it's a bad thing, but it's the volatility that kills you, not just in the energy market, but also in financial markets, like we saw in March 2020, when the 10-year treasury yield was going up and down like a Turkish government bond yield, all over the place, not like a risk-free government bond, right? So I also noticed that, and I think I pointed it out during Christmas time, towards the end of the year, we got a reprieve in Europe in terms of energy prices. Prices went down quite a bit, but they've come back up. So again, I'm referencing Javier Blas. I've spoken about Javier Blas. He's the Bloomberg correspondent, reporter for the energy sector, commodity sector. He's quite good. You can find him on Twitter. And he tweeted yesterday, he said, the higher they rise, the harder they fall and back. European natural gas, TTF, fell around 65% from December 21st to December 31st. Since then, it's up 48%. Still, in absolute terms, TTF is well below the all-time high of almost 188 euros per megawatt set on December 21st. So I'll show you here a chart of the gas futures. It's on the ICE exchange. It's a Dutch TTF gas future. So you can see what he's talking about here. It got up to an all-time high just before Christmas, almost up to 200. It dropped massively. and it's rebounding now. But as you can see, compared to where it used to be, let's say back in 2020, it's still really high. It used to trade around 15, and right now, let's see where we are. We are around 95. So this is going to continue to hurt economies around the world, especially in Europe, in the UK. And yes, the weather in Europe, at least here in the UK, it's been a relatively mild Christmas period, but now it's starting to get quite cold. So that affects it as well. And the other thing I would say, there's the factor of the geopolitical factor of Russia and all the pressure, all the saber rattling that's going on about the Ukraine. I think it doesn't help. It doesn't help Russia's willingness to provide ample supply of gas, even though I think they're providing the contractual amount that they've agreed to provide. And I also saw that Europe was able to source a lot of liquefied LNG gas from the US during Christmas, just during the Christmas period before New Year. But how much longer are they going to be able to do that? So this is a big problem. As I've been saying, it's not going to help the economy. It's not going to help subdue inflationary pressures, because energy is a huge part of the economy, not just for consumers, but for industry. Industry needs energy to keep moving along. And am I saying that energy prices are causing inflation? No, I think it's the consequence of inflation, because inflation, as you probably know, hopefully, as I've been telling people for years, is a monetary phenomenon. Yes, I think that's going to continue to hurt the standard of living in Europe and all around the world. And with that, I'd like to recommend a really good interview. And this is on Rio Vision Finance, which I don't follow very closely. I used to some years ago. So in this interview, the co-manager of the Bullion Reserve, I'd never heard of them. His name is Simon Mikhailovich. He interviews a guy called Ross Kennedy. Ross Kennedy is the founder of Fortis Analysis, LLC. And the title of the video is Why the US May Never Recover from the Supply Chain Crisis. And yes, what's that got to do with the energy crisis in Europe? Well, I think the same problem is going on in Europe and the UK with the supply chain. And the major gist of this interview, I would say, is the fact that we're moving away from 50 years of financialization where policymakers solve problems by cutting interest rates, by giving out credit, and never thinking about infrastructure. And I think that's one of the big problems of the energy sector in Europe. And also, I've spoken about this net zero madness. That's hurting a lot the energy sector in Europe. We saw that just before the end of the year. I think Germany had 6 nuclear power plants left, and they closed 3 of them. So they've only got 3 left. Since 2011 in Fukushima, the German leadership under Angela Merkel, who's not there anymore, they decided to get rid of nuclear energy. So that's another thing as well. Germany is the biggest economy in Europe, especially, well, in the EU. Of course, the UK is not part of the EU anymore, but I'm talking about Europe as a whole. It's one of the biggest economies in the world. So they're giving up on their nuclear energy, Well, they have to get some kind of energy. I think last year, last winter, they had troubles with their renewable sources like wind turbines and everything. They got frozen and they had to use gasoline or diesel to to run things again. So renewable energies are a good thing, I would say, but they can't support a major industrial powerhouse like Germany. So I don't think it's going to get any better. Highly recommend the supply chain crisis video. I'm going to put it up in the cards and below in the description. And yes, with that, let's quickly look at where the markets are this morning. So it's almost 9 a.m. London time. We've got spot gold at 1816.60. It's up a couple of dollars. The high has been 1818 and the low 1812. Silver is down about 12 cents, trading at 22.92. High's been 23.10, the low 22.84. The Dow future is down 42 points. NASDAQ is down 54, and the S&P future is down about 7 points. The FTSE index is up about 7 points at 75.05. To the currencies now, we've got sterling at 135.47, up about an eighth. We've got the euro up about an eighth as well at 113.02. The dollar is down about 0.2 versus the yen at 115.90. Yes, the dollar is making multi-year highs versus the Japanese yen. And yesterday I tweeted out this chart here of how the Japanese gold in Japanese yen is done so well in the last 15 years. So it really depends what country you're in. Looking at gold just in dollars, yes, that's what most people do. But look at how it's done versus the yen. It's gone from 70,000 and we're near all-time highs above 200,000. So yes, as I've said many times, gold is a great neutralizer and a great hedge against currency debasement, because that's what the Japanese have been doing for decades. They've been, with the leadership of their government and the BOJ, they've been printing and keeping rates at zero or negative interest rates because they're up to here in debt. And if they let the market take over, the whole thing implodes. So is it any wonder that gold has been doing well, even in what some people consider a deflationary environment in Japan? So the dollar is down slightly versus the yuan at 637. So yeah, the dollar stabilized against the yuan, but I think the medium to longer term trend is still lower for the dollar versus the Chinese currency. Aussie dollar is unchanged at 72.38, and the dollar is up slightly versus the Canadian dollar, 127.15. The Kiwi dollar is down about 0.1% at 68.05. So we're going to look now at the commodities. We've got WTI crude. It's still stuck around this 76 handle. It's down about 0.5% at 76.50. High-grade copper is down almost 1% at 443. Carbon emissions still highly elevated, as I said yesterday. And carbon emissions, the higher that goes, the worse it is for European natural gas prices, I would say. And yes, what about the bond market? We've been looking at the bond market and how yields have been spiking higher in the new year. Well, the 10-year yield yesterday got up to a high of 168, so it went up another 5 basis points. Right now, though, it's down about 2 basis points, around 165. So, yes, not good, but it seems to have stabilized a little bit. but we're going to keep an eye on it. And it's not just the US bond market that is showing signs of fragility, because when yields go up, the price of bonds go down. And even Germany, where PPI is going up like the highest it has in 60 or 70 years, like at 30%, and their CPI is around 4 or 5, their 10-year yield, the Bund yield, is still negative. But as you can see on this chart, it has gone from minus 40 basis points to almost back up to zero. We are at minus 12 basis points or thereabouts, and you can see how it's rising. I know it's still negative, but the trend is what matters. And the same thing for the UK gilt. Yes, the same kind of move. Back in December, we're trading around 0.7%, so it's not negative. And now we've jumped up and we're almost at 110. And the key level here, I would say, is around 125. If we break through 125, it's not good news for the UK. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.